Welcome to another weekly stock market update. Today is March 22nd, 2020. The S&P 500 lost more than 1,000 points, or 32% in the span of 5 weeks, due to the spreading of the coronavirus and its effect on the economy. With the recent sell-off, two primary questions in most people's mind. They are, has the stock market hit bottom, and how much lower will it go? In this video, we're going to review the stock market internals and analyze the S&P 500 to see if the market has hit bottom and where it might be headed in the near term. And we will also analyze the US dollar, gold, and the oil. And I will give you my take on why gold and US dollar are doing what they are doing. Then I will share with you on what I'm waiting to see from the Fang stocks. So stay tuned. And here, looking at the chart of all the major market indexes, as you can see, finally the S&P 500 also closed below the December closing low, the December 2018 closing low, along with the New York Stock Exchange Composite, the Dow Jones Transportation, Dow Jones Industrial, and also the Russell 2000. Now, the NASDAQ 100 and the NASDAQ Composite still above that 2018 December low. So we're going to still wait for that because eventually this index have to come down and take out that low. Depending on how we're going to take out that low, will the other major market indexes will follow suit to make a new low, or will it basically make a higher low? So that will be the clue to tell us is the market near the bottom or not. Right now, we're still kind of waiting for the verdict, but we will go to the internal and see there are a little bit of a snippet of positive sign that at least we might get a little bit of a bounce in the near term. So let's go and take a look at the sentiment. First, you can see that the fix is really elevated. Last week it went as high above the 80, and right now it closed at 66, just a little bit above 66. So it kind of pulled back a little bit, and notice that the S&P 500 actually closed with a lower low, but the VIX did not close a higher high. And in addition to that, also looking at the put-call ratio, you see the put-call ratio, even though it is still above 1, but it's only barely above 1, but also it is much lower than that 1.4 or higher than 1.4 that was made a few days ago. So you can see that right now, these sentiment is showing, although it's still negative, but it's showing a little bit less negative for while the market is hitting a lower low. So that's a positive also in that term. And looking at the advanced decline, the cumulative new advanced decline on the New York Stock Exchange, you can see that the advanced decline, although on Friday it was actually negative, but it actually is at a higher level than the previous low, while the S&P 500 closed at a lower low. So again, that's another positive sign that we might get a little bit of a bounce. And also on the new high, new low, you see that new high, new low here. On Friday, the New York Stock Exchange actually have 296 more new low than new high. But the value is actually way above this, minus 2,380. And also you note that the S&P 500 closed with a lower low, but the new high, new low is actually much more positive in a sense to relative to its recent low. So again, that's another positive. So that could also be another indication that we could see some sort of a bounce in the near term. And here looking at the NASDAQ 100 also showed the same thing. You see that the advanced decline is actually have a higher value than the recent low, but the NASDAQ 100 index actually closed with a lower low. So that too also present a little bit of a positive bias there to indicate to us that the market could see a bounce coming. Also, similarly, on the new high, new low, you can see that in the NASDAQ, it is actually minus 321, which is much higher than the low here at minus 2,093. But again, you see that the NASDAQ 100 index actually made a lower low. So that too also, similarly to the S&P 500, present a little bit more of a positive tone. And here, looking at the cash index of the S&P 500, you can see that, remember last week we were talking about the possibility of maybe come back up and then get a little bit of a rejection and then push us down to this low here, this December 2018 low. But instead, it did not get much of a bounce, and it just sold off and just followed down to the, took out the December 2018 low, and it actually went down to a retracement level, which we will take a look at in the next chart. Here's a chart of the S&P 500 going back to 2009. We see this is the March 2009 low, and here's the February 2020 high. And right now, what I did is I put a Fibonacci retracement on this entire swing from 2009 to the recent all-time high. There is a 38.2 level here, somewhere around 2351.91. And last week, it actually closed below that. Then the next level is the 50% retracement, which sits somewhere around 2030.16. So we might keep an eye on this level here on this 50% retracement, although we could see a little bit of a bounce up here near the 38.2 before we might come down and test that 50% retracement level for support. So we just keep an eye on it and then see what will come about in the near term if those positive sentiment and also the internal kind of give us a little bit of a positive tone, then we probably would see some sort of a, you could say it, a dead cat bounce or just a oversold type of a bounce, and then we might see it come back up and possibly could test this 2,500 level in that vicinity. So we'll see how this will play out in the coming weeks. And here's the U.S. dollar. Look at that U.S. dollar. It just went up to a new high here. Basically, it closed at 103.825. So it took out this high here, and this is just extraordinary. That it makes such a big move in a single week, because this is a weekly chart here. So right now, basically, I'm looking to see what the dollar kind of pull back, because we need a weaker dollar for the market to move up. And one of the reasons that I believe, and also I read, is because there are a lot of people requesting a redemption from their fund. So the fund basically have to go and sell their asset or their holding, and there's a big demand for U.S. dollar to do the redemption. So that is one of the reasons that could cause the pressure on the dollar, because of the lack of liquidity or lack of availability of U.S. dollar. And that's one of the reasons why the Fed is pumping a lot of liquidity in there. Okay, and in addition to some other stuff that could be going on in the credit market. And take a look at gold here. You can see that gold is also selling off. And right now, we're basically looking to see would it come down and test this 50% retracement level somewhere around 1435.70. Same thing, gold is basically, people sell what they could sell, and gold is something they could sell to raise cash. Same thing for redemption or margin call and whatever that may be, that demand them to raise cash. And this is one of the instrument that you could sell easily to raise cash. That why the U.S. dollar and gold is being hammered in the recent week here. So for the oil, remember we were talking about the possibility of coming down to this 26 area, which it did last week, and it even took that out. And you can see that it came down to the to the low somewhere around 2052. Also, the other thing is I have placed a Fibonacci retracement here to see is there any sort of level that could provide some sort of support. And we seem to find, 1618, somewhere around 21 area. Since the price went to that a little bit, went to 2052. So might see a little bit of bounce coming back up. Then what I also did is if we do get a bounce and use this swing here, put a Fibonacci retracement on the swing, then we might see it maybe come back up somewhere around the 35 to 37 area. And maybe there might be a side deal, might be a workout between the Russian and the Saudi on some sort of a production cut. So we'll see, because definitely with the oil price down at this low, nobody is going to make money on that. And just creating a little bit more havoc for the global economy, in addition to all the havoc that is being created due to the coronavirus. So I think there's going to be some deal between the Russian and the Saudi to work out some sort of a agreeable production cut and firm up the price of oil in the near future. That is just my opinion. So as you can see, the market is still in flux. We haven't seen a bottom yet, but it seems like that a lot of sentiment and also internal is indicating that short term we might get a little bit of a bounce. And then from there, we'll have to figure out how low it's going to go before we actually see a bottom. Now, the other thing is right now we only see that the NASDAQ has not take out that December 2018 low. Now, if the NASDAQ take out that low, while the other indexes is making a higher low, and that would be a sign that the market might have been, might have put in a bottom. But right now, I have not seen that from the indexes, so could not say it in any sort of definitive way that the market had bottom. So we're just basically playing it in any kind of bounce as a dead cat bounce or oversold bounce, and wait for the NASDAQ to go through its course. So the other thing is, one thing I want to leave with you, why is the NASDAQ is still above the December 2018? What is holding it up? Well, let me share with you on this FAANG stock here. These are the chart of the weekly chart of the FAANG stock. Here's Facebook. Right? You see Facebook, this is the December 2018 low. And essentially, we are looking for this consolidation area here. You see, Facebook is trying to come down, but it's still above this December 2018 low. And this is Apple. Apple is not coming back into the zone yet. And here's the December 2018 low. And this is Amazon. Amazon trying to make it back up, but I believe it probably will come back down again. And here's December 2018 low. And here's Netflix. And here's the 2018 December low. Similarly for Google, here's 2018 December low, and Google is almost getting there. So what I'm watching for the FAANG stock to do is have them, if not all, but majority of them will take out the December 2018 low, and that will pushes the NASDAQ 100 to take out the 2018 December low, whether the market is bottom and ready to turn, or is there more downside to go. So we're going to be watching the FAANG stock, and also the other sector that you might want to keep an eye on, which I'm not going to go to in this video, is the semiconductor sector. Go and check out some of your favorite semiconductor stock and compare to the current price to the 2018 December low. All right, and see how many of yours semiconductor stock is actually close below that low, and how many of them is still above that low. So that is another sector to keep an eye on, because basically it's primarily is the FAANG stock and the tech stock that has been pushing this market, and right now it is holding up the NASDAQ. So we're basically just kind of watching the NASDAQ. All right, if you like this video, be sure to give it a thumbs up and help me crush that YouTube algorithm, and also subscribe and click on that notification icon so you won't miss any future video from me. Thank you for watching, and be safe, and be sure to keep that social distancing. All right. Thank you very much.